Okay, here we are again. This is the ZOOPLA UK House Price Index for the November period. And so this is November period for the ZOOPLA House Price Index. This is where they'll see the housing market in terms of where it is. Now, the executive summary so far is UK house prices have actually increased, according to ZOOPLA, over 2022 up to that point in time by 7.2%. Now, in terms of Scotland, that's 8.5%. In terms of Fife property market, that's 9.3% up to the end of October, in terms of where the house price index is for the Scottish government and how they record there at the registers of the land registry. Okay, average price to buy a property in Scotland is 194,874. Average price in Fife to buy a property is 175,675 pounds. So hopefully that gives you enough information to understand where we are right now. Now, if the average salary in Scotland, let me just point this out again, is 31,000, and it's 31,000 roughly in Fife as well. You are talking about, I'll get my calculator out, I've got it right in front of me here. 194,874 divided by 31,000. That's I've put the wrong numbers in there. Give me a second. I'll have to cancel that. 194,874 divided by 31. About 6.3 times the average salary in terms of the Scottish house prices. In terms of the Fife house prices, divided by 31 is about 5.6 times the average salary. And that is very tolerable still. At the peak of the market in the credit crunch, we're running about 11 or 12 times. That's double that amount. So we can see where we are in terms of affordability for people. I know it doesn't feel like it now because of things like your cost of living going up, in terms of your food prices, in terms of utility prices, in terms of council tax and everything else that's round about you, and in terms of base rates going up as well. However, it's still a lot more affordable than it was in the credit crunch to buy a house in real terms. So the executive summary, back to that for ZOOPLA, what they're saying about the where they see things are. House prices actually, as I said, increased by 7.2% overall. Quarter growth slows rapidly and is set to move into negative in quarter one of 2023. Interesting. That'll be interesting to see if that actually happens. Discounts to asking price have actually widened to 4%. That means overall. Now, in England, it's a different market from it is in Scotland. Scotland, we determine the price of our house by the home report valuation, which is based on historical information. So it could be a bit above. In England and in Wales and in Northern Ireland, they determine the house prices by what they think they could achieve for the house, rather than actually what they think the valuation might actually be according to home reports, because they don't have home reports, or what they call as a home information report. I think it's called a HIP, and they did away with this. But we've still got home reports to stay. So we actually do in a pessimistic way to value houses, and the rest of the UK actually do it in an optimistic way to value houses. Glass half full, glass half empty. Kind of like that. Hopefully that message got across loud and clear. Buyer demand, actually, I'll just jump onto this and I'll show you this graph as we go, because it's important that you see it. There we are here. I wonder who that is. Oh, it's me. Okay, here's the graph right here. As we are. Let me just see if I can get rid of that message itself. Let's see if I can get it up there. No, just have to stick with that at the bottom. Anyway, let's look at this graph. This is actually quite interesting. So what it says here right now is buyer demand 50% lower than last year. There's no surprise about that at all. New sales agreed are 28% lower than last year. Affordability and value for money are key to the outlook for 2023, which is exactly what I said here in terms of the number of times the average salary is to the average house price. House prices in affordable markets are less exposed to higher mortgage rates than in high value markets, where the prices have actually underperformed. The flight, this is quite an interesting one, the flight to rural and coastal areas moves into reverse. In other words, people aren't seeing the countryside and the beach locations as the ideal places to go for now. That's kind of that kind of market's dwindling a bit. It's less heated, I would say. Flats and urban areas are expected to fare better in 2023. Now, I've been saying that for a long time, that flats will fare a lot better because they are more affordable, plus the fact as well that they're easier to heat and they're easier to manage and they've got less cost associated with them. That's exactly why people will begin to go for them. And so the flats market will see a resurge out of there. So the graph here shows recent housing market activity similar to pre-pandemic years. So there's the pre-pandemic years, November to December 2017 to 19. Demand was 46% down on it than it was on just the year past. In other words, in the boom years, so 46% down. So what is it now in comparison? Well, it's 49. So it's almost similar to what it was before the pandemic. You can see number of sales agreed, 26% down and similar, but just now it's 31% down. So it's kind of, again, similar to there. And new flow of supply, 28 versus 28. That's no surprise, actually, because we've got about 949 properties right across Fife up for sale at this point in time. And that kind of gets into now that I think we're starting to level off in the supply, and supply is reaching demand now. So it's equalizing, but we've still got a good supply to give buyers a choice. Therefore, that's why the prices will level out for that reason. So let's pop back to the graph. And stock of homes for sale, it was 12% more than it was before, and it's now 7% less. So a wee bit less as well. So the dynamics that have shaped the housing market over the last 5 years, this is probably the summary from this. Dynamics that have shaped the housing market over the last 5 years are shifting. We are expecting affordable urban centres to fare better than average in 2023 but the inner London market may require another year before it is ready to rebound. So this is a UK-wide thing for ZOOPLA. Momentum and price inflation falls away quickly. Yeah, we could see that here on this graph, actually. This is the house price growth losing momentum quickly. So you can see that in November 2012. It was the year on year. So this is the house price index where it was, and then it goes right up, and you've got the prices going up, and then they start to come down, and they start to stabilize a bit more in the July 2019, and then there's the boom. It goes right up in terms of the price. But you're seeing now that they're starting to come down. But you can see how that comes down quite dramatically into November 2022 from March 2022. So it's dropping quite dramatically. This is a result of things like inflationary pressure. This is a result of the doom and gloom that's spread on the media. It's also a result of the cost of living getting a lot dearer, inflation going up as well. And also people with a bit of uncertainty. They're not very sure, so they're kind of holding on. They're just now. They're not proposing to buy because they can get away with staying in their house a wee bit longer. So that's why they're holding off a bit more. And that makes a fundamental difference to the overall consumer confidence, we call it, in the housing market. Okay, so the sharp drop in demand for housing in the summer was rapidly reversed in the upward momentum in house prices. The average prices are up 7.2% year on year, an increase of 17,500. The underlying rate of the quarterly price inflation has slowed quickly from over 2% until the summer, where it was 0.3 in the last 3 months. You can actually see the economic data out today as well, as the GDP UK economy has actually shrunk in the last quarter by 0.3%. Not the end of the world, but it was 0.2% expected. So it's a bit. I wouldn't say the word worse. I would use. I would say it's a bit different to what we'd expected. Not hugely different, not significant or anything like that. We expect the index. This is what ZOOPLA says. We expect the index to register quarterly price falls over the first half of 2023, dragging the annual rate negative by mid-year. So they're expecting price reductions as well. Market activity returns to poor pre-pandemic levels. Well, it wasn't really poor pre-pandemic levels. The market was actually quite stable and quite normal before the pandemic. So I don't see any reason why that actually can't be a good thing going on. It just means houses won't sell as quick as we expected over the last year, and it won't sell for the astronomical prices over the home reports that we expected from last year as well, as all these prices have now caught up. So urban areas to fare better in 2023. The rural and coastal locations have actually run out of steam. It's a key trend which has actually happened over the years, over the last 2 years, which people have actually been looking for more space. They've been looking for more rural locations and more coastal locations, which rural is countryside, urban is town and city centre. So rural locations and coastal locations have actually run out of steam because of that, because people are actually thinking, okay, well, the prices are actually going up too much now, and it's kind of going off the boil a bit, and that's fine. That's okay. That keeps it all a stable market. It's not a huge drop. It's just that it's not the flavour of the month of the year anymore. So the urban areas are fare better. So let's have a wee look at there. As I can look at this graph, and this will tell us what we see. If I can just zoom in on that a wee bit more. Hopefully you can see that. Now, they can see here as they're looking through, this is buyer interest remains, urban areas to fare better in 2023. So that's the city centres and towns and villages. Buyer interest remains strong. This is what ZOOPLA says, in more urban settings where jobs are being created and there are more services. Family housing in city suburbs and community areas have registered above average demand over the last year, while demand in city centres has been weaker. Postal areas, including the ones that you've seen here on this graph, are all actually above average in demand. All the areas have their own employment base, and they're all also adjacent and have good transport connections into a much larger employment centres. So you can see what's going on here. If I could say that, all these areas have their own employment base, but they're also adjacent to or have good transport connections to the much larger employment centres like London, Manchester, Birmingham. This is the masses actually leaving the major cities and actually going into what we call the urban locations, but talking here actually and show you this. There we go. We're back on the screen, back in business. Okay, so here we are here. That's where we are right now in terms of the urban areas to fare better in 2023. Affordability is the key to the outlook for the house prices. Again, it's all about affordability. 5-year house price growth in some areas are actually seen about 47% growth in terms of the postal code areas. But here's another graph here. I can just show you that and show you what the ZOOPLA says in terms of, this is the house price growth for the last 5 years linked to affordability. So this is the rest of the UK, which is in the purple. This is London adjacent commuter areas. So you can leave London and London and the adjacent commuting areas is actually a lot less in terms of that, where people are tending to go for the house price growth and the rest of the UK in terms of the, as we said, town centres, villages and places like that as well. So that's actually quite an interesting statistic. More affordable markets see lower price falls in 2023. So more affordable markets, which is the Fife property market, can't emphasize it enough. As I've said in the beginning, it's only 5.5 times the average salary to buy a house in Fife, which makes it extremely affordable in terms of this area, in terms of the rest of Scotland and the rest of the UK. That's why Fife will weather the storm, if there is a storm, wind, a wee bit better than, or a gale, maybe put it in that perspective, a wee bit better than any other area because it's more affordable in terms of these house prices. Flats are becoming better value for money. London and commuter areas are actually underperforming. You can see that on that graph here. And here you can see the price gap between flats and houses. This is actually quite interesting. So earnings have run faster than prices since 2017. Which is slowly improving affordability, but average prices remain high by national standards, and mortgage rates are now higher than last year. The London housing market will rebound soon, but this requires further improvement to housing affordability, and they expect these prices to register above average price falls of between 5 and 8% in 2023, which will improve affordability alongside all the expectation of lower mortgage rates. We actually expect next year that mortgage rates might come down. I've actually been speaking to some brokers who actually said that fixed rates will actually probably come down a wee bit more in the early start of the year. in terms of where they are in terms of the price point as well. So that's where they think they'll be. A resurgence in employment growth will be triggered in the turnaround in this underperforming market in the last 1 and 2 years. As I said, you could see there, you've got the flats in the purple, you've got the houses in the black line, and you can see there where the price gap between flats and houses are actually widening now, and it's becoming more affordable to buy a flat than it is a house, which is actually what we tell you here. So flats are becoming better value for money. And ZOOPLA says the price of flats are also underperforming the rest of the market as it stands right now. Apartments make up around 1 in 5 homes in the UK, but price inflation for them has lagged behind growth for houses, exacerbating the search for space and concerns over cladding and leasehold charges. That's mainly in England. And the chart we're actually showing you there actually shows the average price separating between both of these markets in terms of its price point. Quickly, we'll just jump on to finalise here and show you the price index as we see it. So this is it right across Scotland. You can see the affordability levels. See in Scotland itself, you've got a 5.5 according to ZOOPLA. And the northeast, you've got 6.7, 8.3, 8.4. So it actually just tells you straight away that, yeah, Scotland's still more affordable than most places. See, according to ZOOPLA, Aberdeen's sitting at negative growth. Now, that's down to the fact that it's Aberdeen city centre, which is negative, but the rest of the areas outside, just outside of Aberdeen, which is the areas we've just been talking about, which will see more growth and weather the storm a lot better, or gale a lot better, the wind a lot better, will be places outside of the main city centres. So you can see that right across there as well. Edinburgh, 4.3% as well. Just jump on to prices right across. Average prices for a house, according to ZOOPLA, and the Edinburgh area, 263,600. But that's, remember, according to ZOOPLA, that's not including all the properties actually bought and sold, because some of them don't actually go through ZOOPLA. But you can see as well, London, 524,000 for the average price there. According to Land Registry, it's actually 545,000, which is actually quite a lot. But look, Glasgow, average price point, 140,000. Probably that's a bigger section of Glasgow, which takes into account all the smaller areas and all the terraces and the flats as well. So hopefully that's given you a good insight into where we are in terms of the housing market right now. Everything looks okay. According to ZOOPLA, there's going to be a, you know, the areas like Fife, for example, are going to probably weather the future and next year in terms of price changes a lot better than the areas outside of the main, outside of Fife itself. So the better the average price in terms of the lower value in some areas, the better it will do, because more people will go for them than go for the higher price points because of affordability issues coming into play. And hopefully that's given you a good insight. If you've got any questions to say after this, or you want to listen to the podcast and you want any questions later on, please feel free to message me on here. And until next time, guys, that was a quick roundup of the ZOOPLA statistics than usual. I'm Jim Parker for Fife Properties.